Hey, welcome everybody. This is the Options Moneymaker New Cycle Trading and Analytics training for the Aurora trading system. Simple, profitable signals that we've been developing for futures and options traders. So we're going to go ahead and get started. So those of you who may not be familiar with me, my name is Mark Dannenberg. I'm the CEO and founder. And I spent 26 years of my career as a senior executive for a Fortune 500 company. During that time, I was trading futures and options as a hobby for about 20 years. I had a strong desire for what I described as lifestyle freedom, which meant that I could generate an abundant income. I could do it from anywhere. I could pick and choose when I wanted to work, how I wanted to work, and where I would work from. So my trading experience includes 30 years, as I mentioned, 20 of it as a hobby, trading both options and futures. And for the last 13 years, I've been teaching options and futures trading to a community of traders who have a desire, much like me, to learn how to effectively incorporate options and futures trading into their lifestyle. I founded Options Moneymaker in 2009. That was the beginning for me to start teaching traders what I refer to as the art of trading, both options and futures. And then in 2019, I founded New Cycle Trading and Analytics. I felt there was a need for a marketplace need for a better market metrics software for traders to identify when to get in, when to get out. We had focused our early years on teaching strategies, and we'd used a lot of other software. And I found a lot of flaws in most of the other software that we used. It worked effectively, but not as effectively as I felt it could. So we've invested our time and energy and resources since 2019 developing and building market metric software. What we bring to you this evening is the Aurora trading system, which is the third generation of market metrics that we have developed, and I think you're going to be pretty excited about what you see. I have a small team of very seasoned traders. We're all committed to helping each trader in our community learn the art of trading. Kristen Kane is with me this evening too. Kristen is one of our team leaders, and she spent 28 years of her career in learning and development. She has a passion for helping others acquire knowledge. She worked with me at my corporate job, and she was responsible for the learning and development for a large group, about 2,500 associates in my division. And she wants people to help to learn and acquire the knowledge they desire, but most important, to reach their personal goals. So she's really a great asset to this team. She has your interest in mind. She has a vested interest in helping you achieve whatever you desire. She's been trading for about 10 plus years. I introduced her to trading about 10 years ago, and she's familiar with and loves trading both options and futures. She joined us here at Options Moneymaker and New Cycle Trading in early 2021, and her primary focus has been to help me finalize the research, testing, and analysis of the Aurora system. So as we bring the Aurora trading system to the live trading room last week on Monday, and as we introduce you to the training this evening, this is the first of 5 sessions. Kristen has been an integral part in helping to get us to where we have a very well-defined set of rules. So you'll be hearing a little bit from her this evening. So just first of all, a bit of an overview of the Aurora trading system. As I mentioned, this is the third generation of market metrics that New Cycle Trading and Analytics has created. We started with profit flow analytics, and then we phased into the adaptive entry system. Adaptive entry system is what most of our traders have been using and trading for the last year and a half. And I felt that there was a need and an opportunity to continue to develop and enhance the adaptive entry system software into something that would provide a much greater earnings potential, much greater profit potential throughout the day, and also be designed to effectively trade in both trending and choppy markets. So I worked with Craig, who is one of our team members at New Cycle Trading and Analytics, and Kristen helped me refine this over the last year. And what we've brought to you is a system that has very strong profit production for a potential 6 to 7 figure income for any trader. Now, that requires a little bit of scaling to get to 7 figures. When I say scaling, I mean contract scaling. We're going to talk a little bit about personal trading plans here later in this session and a little bit in session 2. But this system, the Aurora system, is a system that presents to you tremendous opportunity, generally more opportunity than what most traders are looking for in terms of their personal income, desires, and needs, but it has a strong potential to produce 6 to 7 figure incomes for any trader who is diligent about applying their skills in learning this system. And we're going to show you exactly why I say confidently 6 to 7 figures. It's a simple set of signals that are interpreting multiple complex indicators. One of the things that I felt was a flaw in most of the systems that I've worked with in the past is lots and lots and lots of technical indicators, and they're all stacked or placed side by side, and you're doing this scan to interpret them, and you're looking for coordination of all of those different signals. Well, what I believed was that we could simplify that process for any level of trader, experienced traders, brand new traders, and we could simplify that process by presenting to you a single signal. And in some cases, it's a single signal that's being aligned across 2 different time frames. It's really very simple. Now, those of you who have traded the adaptive entry system signals, we did not abandon those. That is a really strong set of signals. We've embedded them within the Aurora trading system, so you'll see that. All right, so this is a quick snapshot of what you will see when you are trading the Aurora system. If you're participating in our live trading room, or if you have your own subscription to the Aurora system, there are 3 time frames that we are focused on. There's a 3-minute chart, there's a 5-minute chart, and there's a 10-minute chart. So that's 3 time frames. The Aurora system itself, the primary signals that we are trading, consists of 2 indicators. Now, when I say 2 indicators, this is where I was referring to our indicators are interpreting multiple sets of technical indicators behind the scenes and presenting to you as a trader a very simple to understand and simple to recognize signal. The indicators that we're trading are this set of blue and red blocks, which we refer to as PBA, and this set of blue and red blocks, which is called CXA. And that is as simple as the Aurora system can be. Now, there's multiple other things that you see on here, and they can be used in multiple ways, but we're going to break this down to its lowest level of simplicity. And we're going to show you in this 5 training session series how to identify the 3 primary entries that we use with the Aurora trading system. One is referred to as PB3, one is referred to as PB35, and one is referred to as PB13. These are combinations of using the PBA and CXA, and it's combinations of using the 3-minute with 5-minute and 3-minute with 10-minute alignments. And that's really as simple as we could make it, and it's very, very easy. Once you understand and learn the signals, it's very easy to trade. Now, there are 2 types of trades based on these primary signals within the Aurora trading system. One we refer to as catch trades, and it literally is a signal that is telling us there is an opportunity to catch a profit that is either between trends or it is within a trend and it's adding profits to a current trend that we might be in. The PB3 and the PB35 signals, and you'll get definitions of both of these, exactly how to trade them. These are what we refer to as catch trades. These are catch trades. We're looking for a quick profit on these. They can either be aligned with a trend or they can be a counter trend signal in between one trend and the next. PB13 is a trending indicator. We enter a PB13 trade, and the intention of entering a PB13 is to hold for a longer movement, hold for a longer trend, and manage our position to lock in profits and reduce our risk within that trend. And what we're looking for is bigger profits on those trending trades. Today was an awesome trending day. Had some really nice profits off of our trending trades. So here in session 1, we're going to be focusing on PB3. And then in session 2, we're going to focus on PB35. In session 3, we're going to be focused on PB13. So PB3 and PB35 are our catch trades. PB13 is our trending trade. In session 4, we're going to dig into trade management. We're going to talk about risk. We're going to talk about opportunity, how to optimize your opportunity, and we're going to talk a little bit more about the DOM. We've had a lot of questions about how to manage trades on the DOM, and when I refer to the DOM, I'm referring to the Infinity Futures DOM. Infinity Futures is our futures trading platform that we use. Then session 5, which is going to be available for paid subscribers only, we're going to wrap up some things. We're also going to get into a philosophy that we have named PATS. It is an outstanding way to be able to take a simple concept and help you understand how to continue to trade when you are having a great day, but know when to stop. So one of the big questions that traders frequently have is, when is enough enough? When do I stop? How do I not get back my profits? We're going to spend a good portion of session 5 in discussing just that. So in today's session, session 1, in talking about PB3, we're going to give you a definition of it. We're going to define the entry rules. We're going to define for you the parameters. We're going to discuss and teach you the management strategy and tips. And then we're going to talk a little bit about the personal trading plan at the end. The personal trading plan is not an integrated part of the Aurora trading system, but I think that the personal trading plan and the Aurora trading system go hand in hand. And for those of you who may have a desire to grow to a strong 6-figure or even 7-figure potential income here in 2022, that personal trading plan will be a critical part of your success in doing that. So PB3 is using a 3-minute chart, and it's using the PBA signal on the 3-minute chart to catch a movement that could be either with the trend, could be directionally biased with the trend, or it could be a counter trend signal. Now I'm going to show you the chart here in just a minute, but blue bars indicate a long signal, red bars indicate a short signal. In fact, I'm going to just go back here real quick. Here are your blue bars on PBA. Those very simply indicate the bias is to go long, move to the upside, and red bars indicate a bias to go short or a movement to the downside. I also want to qualify this and say that all of the trading that we have done with the Aurora trading system has been done on the NASDAQ 100 futures. We wanted to pick a vehicle that we could test the system, validate the system, and then present a good grounded way to teach the system to any trader who is interested. But beyond trading the NASDAQ 100 futures, our experience in other vehicles that we've been looking at and trading is that this Aurora trading system is just as effective at trading options on whatever watch list of stocks that you want to monitor. It's effective at trading other futures, oil, gas, all the metals, gold, silver, other equity futures like the ES and CL and RTY, and also those of you who may have an interest in monitoring and perhaps even trading cryptocurrency, these signals apply. So we might be using different time frames, and we'll talk about some of that, some of the other non-futures trading stuff later on in the series. All right, so that's the blue bar is long signal and the red bar is short signal. In order to enter a PB3 trade, we're monitoring a 3-minute chart. And when a PBA signal comes on, either blue to go long or red to go short, we can take that signal. There is one qualifier to take that PB3 signal, and that is that we look at the 5-minute chart and we look at the CXA. That's the lower block of blue and red bars. We look at the CXA on a 5-minute, and we just need to confirm that there is no conflict on the 5-minute. You want no opposite color on the 5-minute CXA. So if we had a blue bar at the open of a 3-minute bar, that's telling us to go long. And as long as the 5-minute was neutral or it was blue, we could take that trade. If the 5-minute is showing red, we would not take that trade if the 3-minute PBA was showing that we had a long signal. All of our trades are evaluated at the open of the bar, and it's valid within the first 3 seconds of a new price bar. If we have a PBA signal present itself 15 seconds, 20 seconds, 40 seconds into the open of the bar, after the bar has opened, we do not take that signal. We actually wait for the next bar. So in summary there, we're looking at a 3-minute chart. We're looking for the PBA signal, blue or red, so long or short. And all we need to confirm is that at the time that that PBA signal is presenting itself to us, that we do not have an opposite color on the CXA 5-minute, and that PBA signal has to be valid in the first 3 seconds of a new price bar. When you open a new trade, a new catch trade, remember PB3s are catch trades, we have a standard set of default parameters. There are 2 things you want to use in every futures trade. One is you want to have a protective stop, meaning if the price were to move unfavorably against you, you have a limit to how much you are willing to lose on that trade. Our default stop on this PB3 catch trade is 20 points. So this is based on the NASDAQ 100 futures. Each point is on a NASDAQ 100 futures is worth $20 per contract. So a 20-point stop is a $400 risk. So when you open a PB3 trade, you are putting $400 of risk out there per contract. So if you trade more than one contract, it's going to be your multiple of contracts times $400. So we start with a default of 20 points. Now, there are these market metrics within the system called fractals. Fractals is not something that we created. We didn't create the concept, but we use them extensively. And I'm going to explain more about them here in just a moment. Fractals are a dynamic that allows you to place a smaller stop than 20 points. So if you identify a fractal, and I'm going to show you an example here in just a moment, if you identify a fractal on a 5-minute chart that would give you a smaller risk than 20 points, then you're going to use the fractal. So the default stop always starts at 20 points. Then we evaluate our charts once we're in the position, and we may adjust our stop to a 5-minute fractal. I've got a great example for you here coming up in just a moment. The default profit target is 10 points. So we, in our experience in all the tracking that we've done, thousands of trades that we have tracked and recorded in this phenomenal tracking tool that another associate of ours created, Aaron. Aaron created that, and it's just given us this enormous database of information to be able to make all these decisions off of. We found that 10 points of profit was the sweet spot. So we are targeting 10 points of profit. Now, both of these parameters, the 20 points of risk initially and the 10 points of profit, are based off the open of the bar. It's based off the open of the bar. So we're going to talk about slippage here in just a moment. One of the things that traders will tend to get hung up on is slippage, that they had an unfavorable fill of a half a point or 1 point, and so they get preoccupied with that rather than managing their trade. We always adjust our stop and our 10-point profit target to be those values off of the bar open. And I'm going to give you a couple examples here in just a moment. Once you're in the position, there are really 3 exit strategies. One is you hit your 10-point profit target. You've adjusted your profit target to be 10 points off the open of the bar. The price moves favorably for you. It automatically takes you out of the trade and you're out for your 10 points. Or if you had slippage getting into the trade, maybe you're out for 9.5 points or 9 points or whatever amount of slippage you had. The second method of exiting a trade is the price moves unfavorably against your position and it hits your 20-point stop, or possibly it hits the fractal. If you were using a 5-minute fractal that was an advantage over the 20-point stop, either one of these, it's going to be treated as your exit stop and you get taken out at that exit. So you're either making 10 points of profit or losing a maximum of 20 points on the trade. The third method of exiting the trade is a reversal. And what that means is that if you are in a PB3 and a new PBA bar opens on the 3-minute and there is no conflict on the 5-minute CXA, that you would reverse the trade. So there's a possibility that the PB3 would be, that you would be long in a PB3, that a short PB3 would present itself and it's a valid short PB3. You would close the long trade and you would open the short trade, and that is a reversal. There is one other scenario where you could have a PB3 reversal present itself, but there is a conflict on the 5-minute CXA. And in that case, you would simply close the trade, but you would not reverse into the opposite direction. One very important thing here is if an opposite PB3 comes on mid-bar, because remember, we're taking all of our trade decisions based on bar open plus 3 seconds in that time frame. If an opposite PB3 comes on mid-bar and it prints, meaning that bar closes and validates the print, but the next bar does not open confirming that print, but instead it opens blank, you're going to hold the trade. So let me just explain that again. You're out for 10 points of profit, you're out for 20-point maximum stop. If you're long on a PB3 and an opposite short PB3 comes on and it's a valid no conflict trade based on the 5-minute, you reverse the trade. If a PB3 comes on mid-bar and prints, but the next bar opens blank, you continue to hold the trade. So you're really looking for a reversal of the PB3 signal before you would take the trade off. One reversal could be just closing the trade, and that's when there's a conflict on the 5-minute, and one reversal is no conflict on the 5-minute, and you would reverse the trade. Now, there's a couple of things here that we've learned in our own trading and again, tracking thousands of these trades. One is your target is 10 points of profit off the bar open. We have so many of these that get to 9 points, 9.5 points, and then it turns around and reverses on you. There's absolutely no way you want this trade to get within 1 point of your profit target and then reverse and give you a 20-point loss. You just don't want that to happen. So our rule of thumb now is if we get to 9 points or better of our goal towards our profit target, we consider inserting a 5-point profit stop. So what that means is if the price reverses immediately, we might only make 5 points on that trade. But if it continues to move higher, we more than likely are going to make 10 points on that trade. But we don't want to be at 9 points. We actually had an example yesterday in the live trading room where it got to 9.75 points and reversed. And we had some people who did not lock in 5 points. It ended up resulting in a 20-point loss for them. So that's just part of management, and that's part of getting used to the system. But this is, I think, a important little tip for those of you who are going to be trading. Another important tip for you is this mostly applies to, I'd say, the first 15 to 30 minutes of regular market session open, 9:30 a.m. Eastern till 10 a.m. Eastern. If the previous 3-minute bar, if you presented with a signal, but the previous 3-minute bar is 50 points or more, the range from the low to high of that bar, you might want to consider skipping the signal. This is a very comprehensive system, and we have tons of data, which I'll be sharing with you during this training curriculum, that shows what the performance is of the system. But we don't need to take every single signal. In fact, those signals that come on after a 50-point bar, we don't record them. We don't trade them ourselves, and we don't record them in our tracking. Because if you have a 50-point movement prior to your signal, it's really not that big of a deal to have a 20-point or so retracement and take you out for a loss before it continues moving in the direction that you thought it was going to move. So we typically find that in the first half hour of trading, if there's a 50-point bar that's presented, we're going to skip the next trade that is presented to us. If the prior bar is less than 50 points, we'll take the trade. And one other thing, and you'll understand this more clearly when I show you a chart, we want to wait for a break in the 3-minute PBA signal before entering another catch trade in the same direction. So that'll be a little clearer here now that we look at the chart. So let's kind of put all this together. This is an example of a PBA signal, but let's put all this together here. We've got our PBAs, red, blue, white is the same as blank. Just accept white is the same as blank. It's a neutral condition. It's not long, which blue is long, and it's not short, which red is short. Our CXAs are down here. We typically don't use the 3-minute CXA, but we like it on our chart as a point of reference of what might be coming. The CXA will frequently come on ahead of the PBA. So here, for example, we had a clue that we might be seeing a short PBA presenting itself. And that's exactly what happened. The 5-minute, so this is a 3-minute chart. This is a 5-minute chart. The 5-minute CXA is our point of reference. So we've got PBAs on the 3-minute and CXA on the 5-minute. Those are our two key determining factors of whether or not we have a valid PB3 trade. So in this example, the 3-minute PBA short indicator came on at 1324 on January 7th. So there was a short PBA indicator right here. You can see that the PBA is red. and that came on at the open of the 1324 bar. And so we simply need to confirm that on the 5-minute chart, the CXA 5-minute had no conflicts, and it did not. The only conflict would have been if the 5-minute CXA was blue, indicating long. That would have been a conflict, and we would not have taken that trade. We have a 10-point profit target, and we have a 20-point protective stop. So this trade, the bar opened at 15,629 and a quarter. That's right here, 15,629 and a quarter. So if we had slippage, it doesn't matter. If we got filled, if we had favorable slippage or negative slippage, it doesn't matter. If we got filled right at bar open, it doesn't matter. Our exit is still going to be 619 and a quarter. We always place our exit 10 points off the open of the bar. So since the open of the bar was 15,629 and a quarter, we're going to place our limit order to close the position at 15,619 and a quarter. Now, before we moved favorably, we can see that the price moved a little bit against us. And in the upper left-hand corner up here, you can see that the bar opened at 629 and a quarter. It actually moved up to 635 before moving favorably for us. So we had 5 3/4 points of what we call drawdown, but it didn't get close to our 20-point stop. So we were holding through that drawdown, and then the price moved lower and actually moved on that same 3-minute bar that we entered on, moved down to 614 and a half, which was almost 15 points of movement. So it comfortably hit our 10-point profit target. So we either made 10 points on that or 10 points less whatever slippage you might have had. But you can see very clearly that the 3-minute presented itself and there was no conflict on the 5-minute. Here's another example of a PB3 trade. Now on this one, at 11:45, so this is 11:45 bar, not the one highlighted here, which is 11:48. At 11:45, we had a PBA long, a blue signal, come on, but it came on mid-bar. It did not come on in the first 3 seconds of the bar open. So that is not a valid entry for us. But we know that when that comes on, that we might be teeing up for a valid entry on the next bar. And that's exactly what happened here. So at 11:45, the PBA long signal came on mid-bar. We did not enter it, but we did confirm the entry when it came on at 11:48 on the 11:48 bar. And at 11:48, we had no conflict. We had blank space on the 5-minute CXA. So we take that trade, we go long, and we see that the bar open was 15,619.50. So we immediately set our profit target at 15,629.50. Doesn't matter whether you had 1 tick of slippage, 3 points of positive slippage, a point of negative slippage, it doesn't matter. Your profit target is still going to be 10 points off the open of the bar. Now we can see in our open, high, low, close data up here that we opened at 619.50. We actually retreated first back to 617.75. So we had 1 3/4 points of slippage. I'm sorry, not slippage, but drawdown on the trade. Drawdown is negative movement against the directional bias of our position. And then on that 3-minute bar, we easily hit our profit target of 629.50, because you can see on that 3-minute bar, the 11:48 bar, it went up as high as 657.50. So moved up about 38 points from the open of the bar. And so we comfortably took our 10 points. But once again, the 11:45 bar, when you're looking, the 11:45 bar, when you're looking back at it, looks like it was your entry. It was not, because it was mid-bar. 11:48 is your valid entry, and at 11:48, you just need to confirm that there's no conflict on the 5-minute CXA to get into this trade. One more example here. This is on the 3rd of January. That's the first trading day of the year at 7:42 a.m. Now, this looks a little odd here because we are saying that there was a 3-minute PBA long signal. But look, that's red, and we've got blank space right here. Well, sometimes that can happen. So at 7:42 a.m., we had a long, a blue PBA that came on at bar open, and we had no conflict on the 5-minute CXA. 5-minute CXA was neutral. So we went long here. We went long at 15,441 and a quarter. That was the open of the bar. So we have our profit target set at 15,451 and a quarter. Well, we can see in our open, high, low, close information up here that we only made it up as high as 443. We didn't even get close to our 10-point profit target. But one of the things that this trade demonstrates is the importance of not just adjusting your profit target, but also looking for an opportunity to perhaps reduce your risk on the trade. Our default stop is always 20 points, as I explained to you. So our stop would have been at 14,421 and a quarter, 14,421 and a quarter, 20 points behind our open. But the first thing we do is we look at an opportunity to use a fractal. And we see that we had a 5-minute pending, 5-minute pending fractal here. And the price level of that pending fractal was 15,430 and a half, which means that we could use a fractal, which is a market metric, not an arbitrary price point. And we would only have 11 and a quarter points of risk instead of 20 points of risk. Now, fractals, I'm going to give you a link here in just a moment. If you don't really understand fractals, there's a short tutorial that we've created, which you can learn more about fractals. If you're really astute, you will realize that this actually, at the time that we opened the trade, was a pending fractal, not a validated fractal. However, if I look at the 3-minute chart at that same price point, which was 430 and a half, we had a valid confirmed fractal on the 3-minute. So that gives me confidence to say, yeah, I know this is a pending fractal on the 5-minute, but it's already confirmed and validated on the 3-minute. And I can reduce my risk from 20 points to 11 and a quarter points. So that's where I'm going to move my stop. So there are really two things going on once you get into a trade. You want to just quickly scan and see if there's a fractal that you can adjust your stop to. And if there is, make that adjustment. And you want to also take a look at how much slippage you had and adjust your profit target on your trading dome to be 10 points off the open of the bar. So in this case, we lost on this trade. Fortunately, we didn't lose 20 points. It reversed almost immediately. And we can see on the very next bar, which would have been the 745 bar, that we moved below. The price moved below our 3-minute fractal and what was our 5-minute pending fractal. And so it took us out of the trade for 11 and a quarter points of loss instead of 20 points of loss. Now, one of the things that I mentioned that is a key to trading the PB3s is you only take a trade in the same direction after a gap in the print of the PBA on the 3-minute. So what I mean by that is here we have a solid every bar print. There's 3 bars in a row that is printing a PBA. I'm not taking a trade on each of those PBA prints. I may have taken the first one. I can't verify that here. I don't have my trade log, but I may have taken the first one. Whatever happened on that outcome, I'm not taking the second one, and I'm not taking the third one, because once I've taken a PB3 trade, I want to see a gap. I want to see a break in the PBA print. A break is this gap right here that you see between this block and this next block. So the next valid trade that I would have taken short would have been right here, and that assumes that that opened at the open of the 3-minute bar. And then I would not have taken the next one because there was no break. Now I have a break for 2 bars, and then there's another trade opportunity that's presented to me. So we've been talking about that a little bit in our live trading room. This is a great example of a break. You want to break between your signals, and the reason is because the market doesn't go straight up and the market doesn't go straight down. These PBA indicators, and the CXA too, are interpreting multiple indicators behind the scenes, and they are assessing whether or not the short-term momentum, the short-term impulse move is going to be higher or lower, and whether or not that's going to be aligned with the directional bias of the PBA that's being presented. So we might see some movement to the downside, we might see a little break, see that movement upside. We have no signal here. We got a head fake on this signal, but then we can get back into a short signal again here when it represents itself. All right, so we've put together a page which you can access easily at newcycletrading.com/Aurora. And that page, let's see here, hold on a second. That page will take you, that link will take you to this page right here, the Aurora page. And if you click on education along the top menu, you're going to find fractal instructional video. It's a short informational instructional video. So if you're not comfortable in your understanding of fractals, or maybe it's a new concept to you, you can go there and certainly then pop into the live trading room and ask us any follow-up questions that you might have, or you can ask questions here in the Q&A when we finish up the session 1. But we've provided that to you so that you can have a way to really learn the details of fractals. Fractals are an important market metric. They give you an opportunity to reduce your risk. We've even, within the context of the adaptive entry system, traded fractals, meaning setting orders to go long at upper fractals and setting orders to go short on lower fractals. It is a very valuable market metric that you can use to reduce your risk and actually enhance your trading. So newcycletrading.com/Aurora, and then click on education on the tab across the top and just scroll down to the fractals instructional video. There's a bunch of other stuff on here which I'm going to be making reference to here in a little bit. So let's look at some live charts. Let's take a look at some live charts here. So let's see here. If we were to go to 12/18 today, so we're going to stay on today. A couple things I want to tie together for you. You've got your charts set up. You've got your alerts set up. You can see your alert log, and you can scroll back to different times a day. You can see when that signal came on. So at 12/18 today, I am going to look on my alert log for a PBA 3-minute short because I have a red bar. And it's right here at 12/18 and 14 seconds. 12/18 and 14 seconds. So that would not be a valid signal for me to take. At 12/18 and 21 seconds, that gives me a valid signal, a valid catch trade signal to take. Now this one happens to, I'm getting a little ahead of myself, this one happens to be a PB35, but the bottom line is there's no conflict with a 5-minute here. And that shows that you have a mid-bar print at 12/18, the valid signal is at 12/21, and then swoosh, you got a really nice move off of that. These PBA signals have proven themselves to be very powerful in helping us identify the most likely near-term movement for those catch trades and grabbing 10 points off of those catch trades. That was a nice, easy 10 points there. Another example from today was 315. If you look at 315 on the alerts log, I did not mean 315, I meant 115, so 1315. We're going to find the 3-minute PBA long at 1315, and it came on right at the open of the bar. So 1315 is a valid entry, and I'm going to look over at my 5-minute CXA and I have no conflict. If I have a white bar or empty space, there's no conflict. White bar or empty space is no conflict. So at 1315, that was a valid trade today, and that opened at 15,770 3/4, and on the next bar, it actually ran up to 15,803. So had a 33-point move on that. That was a really nice trade to grab a nice quick 10 points of profit. And then one other one is 1345. So at 1345 today, let's scroll this over here a little bit on the 5-minute. At 1345 today, the 1345 signal came on 5 seconds late. So it was not valid for us, but just hypothetically, if it had come on at the open of the bar, it still would not have been a valid signal because we have conflict at 1345 on the 5-minute CXA. So the marriage of the 3-minute PBA and the 5-minute CXA is what is defining our PB3 entries, our PB3 entries. They're great entries, they're great trades, they're catch trades. You're basically looking for 10 points of profit off the open of the bar, and a couple of clues. Remember, if it gets to 9 points or more, lock in 5 just so you don't let it get to 9 3/4 and it comes back and takes you out for 20 points of loss. And make sure that you adjust your stop to a fractal if that 5-minute fractal is giving you an advantage over a 20-point stop. All right, so I want to jump over to performance history and give you an idea of how well the PB3s perform. So in comparison to the entirety of the system, as I mentioned, there are 3 primary entries: the PB3, which we're covering in this session, PB35 is going to be in session 2, and PB13, which is going to be in session 3. The entirety of the system is averaging 157 points a day at $20 a point. So that's over $3,000. But now let's break it down and let's look at just the PB3 signal. And this is part of the power of this tool that Aaron created for us, is the ability to look at any individual strategy within the system, or any individual time frames within the system, and based on our data tracking, know what the historical performance has been. So PB3s, if we're trading from 7 a.m. to 2 p.m. Eastern, and that's the time frame that we track and we trade, are averaging just over 37 points a day. So at $20 a point, that's about $740 a day. Out of the 65 trading days that we have in this version of our database, there have been 18 losing days out of 65. Now, what's interesting is we can break this down by day also. So on Mondays, the average for PB3s is over 46 points with 3 losing days. On Tuesdays, the average is just under 32 points with 4 losing days. On Wednesdays, the average is pretty low, just under 20 points with 6 losing days. Wednesday is the underperformer so far. On Thursdays, look at that. Thursdays, PBAs tend to perform almost 57 points. That's average, 57 points with 2 losing days. And on Fridays, the average is about 33 points. Now, what I find very interesting about that is I won't go through each day of the week on the entire system here right now, but Fridays are the strongest performer in the entirety of the system. But it's very clear that Thursdays are the strongest day for PB3s. And that's all just based on data tracking, data history. There's no emotion involved in it. It is either a trade or it's not a trade. It either hit 10 points or it didn't. It hit 20 points of loss or it didn't. And it's just tracking in that manner. By the way, the tip that we gave you to insert 5 points, lock in 5 points of profit if it gets to 9, we don't track that way. We track it either hit 10 points or it hit 20 points of loss or it reversed. So we're tracking in a manner that I believe is ultra conservative. So the overall performance, if I take out the day of the week, oops, there we go. If I go to the daily summary, you can see what the PB3 performance has been. You can just scroll up here and it averages just over $741 a day, trading from 7 to 2. You can take a look at what the maximum drawdown has been, meaning trades that are working against you sometime during the day, cumulative, and what's the maximum profit that you ever got to during the day. So, you know, there are days where you got very strong profits, like here, $1,200 of profit earlier in the day, but actually finished at 0 for the day if you continue to trade the entirety of the day. In session 5, that's some of what we're going to be talking about, how to avoid doing that. Here's an example where you're up $600 just on this strategy. If you traded the entirety of the day, you ended up down $400 for the day. So there's really no reason to give back all of your profits. And we're going to talk about a philosophy that we've really honed in on to help you avoid doing that. All right, I want to touch on the personal trading plan, and this is the last thing we'll touch on here in session 1 before we get to Q&A. The personal trading plan, in my opinion, is an absolute must equal to having the Aurora trading system. Because the personal trading plan is you shifting your mental attitude of this trading to be a business owner. You're not just a trader, you're not just gambling, you're not just doing this as a hobby. You actually are a business owner and you are trading as a business. Now, don't ask me about the tax and the legal aspects of that. I'm talking about your mental attitude, treating this as a business. The personal trading plan will help you plan your daily risk. It's going to help you plan your personal profit goals. What do you desire to make over the course of 3 months, 6 months, 12 months? It's going to help you know when it's appropriate for you to scale contracts. That right there is one of the primary reasons we developed a personal trading plan. I've worked with people who would tell me I was doing so well last week. I was trading 1 contract. So this week I felt confident and I started trading 5 contracts and they blew up their account. That is an emotional-based decision. Personal trading plan helps you eliminate the majority of the emotion from your decision-making when it comes to trading. There's still some emotion attached to trading, but it's going to help you plan appropriately. It's also giving you a tool to track your personal profit loss performance. Let's face it, there are days that just don't feel like they're going very well. You don't feel very good about your trading. You've accumulated a few losses and you start questioning yourself, because if you're trading by yourself, it can be a very isolated experience. You need a community to help and support you. Well, when you're using a personal trading plan, you can plug your current day's performance in your personal trading plan, and your most likely aha is going to be, oh, well, you know what? yeah, today isn't doing very well for me, but in the big picture, I'm on the right path towards achieving my goal. So I'm not going to spend a lot of time on the personal training plan in today's session. We'll touch on it more in future sessions too. But here is a personal training plan that I've set up where we started on January 3rd of this year. And essentially, we start with a $5,000 account. And we know that our maximum risk exposure on a daily basis, we'll get into more of this in session 4, but maximum risk exposure is 85 points, meaning we really don't want to lose more than 85 points in a day. And so we've planned all of that outside of the emotional charge of trading in the market. We've planned for it, and we can now just manage to it. And we are planning for 120 points a day on our winning days, and we're planning for, on our losing days, 30 points. Now we're losing, our system is actually losing about once every 2 weeks, a little bit more than that, about once every 2 weeks. And the average over a 12.5 week period, 7 losses, is just over 30 points. So that's what we're using. The average winning day over the course of our tracking is 190 points. That's just a pure winning day, not blended with the losses. But we're using a number that is less than that because here are a couple things we know. We might not want to take every single trade. You know, not like that trade that we just saw. We might have stood up, stepped away, gone to get something to eat. We might have been interrupted. We might have missed a trade. We're going to have slippage. Okay, so I'm not going to plan my personal trading plan to be right up against the maximum that we're seeing. Well, actually, the average that we're seeing on our winning days. So we're building a personal trading plan for system performance based on 120 points. And then you can decide how many total contracts you want to trade. We always start with one contract. And you can see here that we're graduating up to 2, 3, 4, 5, 6. And I have it set so that it'll max out at 10 contracts. I think 10 is a very practical maximum number of contracts. Some of you may never want to trade more than one contract. Some of you might only feel comfortable getting to 2 or 3. This is why it's a very personal plan for you. It's a personal trading plan that you can build for yourself. So we'll get into it more in some future sessions, and I'm certainly happy to answer questions about it. But basically, here's the if scenario. If over the course of time on our winning days, we average 120 points, not 190. And if over the course of time, our losing days and trades average just over 30 points. And if we do scale up to 10 contracts, the 12-month forecast, so for the entirety of 2022 would grow the account to 4.2 million. This is just math now, folks. It's just simply math. It's saying you start with $5,000, and if you average 120 points on your winning days, and you average 30 points on your losing days, and you are willing to scale up to 10 contracts, which might not be right for everybody, you could potentially grow to $4.2 million. And in the first quarter, you could potentially grow to 721,000. Now, let's scale that down a little bit. That's my plan. That's my plan right there. And we are working towards that. But what if you were someone who said, listen, I'm not really comfortable trading any more than 2 contracts. I'm going to cap it out at 2. And now we can scroll down here and see that the personal trading plan never scales us above 2 contracts. That's $900,000. Maybe you never want to move off of 1 contract. If you just consistently trade 1 contract all year long and you're successful at achieving 120 points and minus 30 on your losing days, well, that's a $475,000 income potentially off of $5,000. You know, what if I'm off base on this? This is my last what if scenario here, but what if I'm off base on this and it doesn't end up averaging 120, but it ends up averaging, say, 75 points? 75 points a day, minus 30 on the losing days, never moving beyond one contract, is just under $300,000 of income. So I don't know of very many places that you could put yourself into business by setting up a $5,000 account, investing some money in learning, investing some money in obtaining the tools you need, which in my opinion is the personal trading plan and the Aurora trading system. And the personal trading plan is just a one-time fee, and you get to download the plan and play around with it. And the Aurora trading system is a month-to-month subscription. I don't know many places that you could have a month-to-month subscription that's under $1,000, and starting with $5,000 of capital that could grow you to potentially just under $300,000. And I think that those values are ultra conservative. So I'm going to reset mine back to 120. I'm going to reset my contracts back to 10. This is a goal we're striving for. I also have a very realistic attitude towards this that says, all right, well, so what if we don't hit 4.2 million? What if we hit 1.8 or we hit 2.1? We hit something, you know, that maybe is 50% or less, or only 40% of this total value. You started with $5,000. That's a really, really good opportunity right there. And that's why we love this Aurora trading system. And that's why we love the personal trading plan. Also at that same link, the newcycletrading.com/Aurora. You can purchase the personal trading plan if you choose to. You click on that link. It's a one-time payment of $197. It's ultra cheap. And you can subscribe to the Aurora system if you are ready to, and you haven't already. I know several of you are attending this training, haven't made the commitment to the Aurora system yet. That's great. We welcome you here. I hope this is valuable to you. But you can simply go to that same link and click on education and click on purchase the personal trading plan. And that will get you access to that tool. All right, so we're going to jump into some Q&A, but before we do, just a reminder, in session 2, which will be tomorrow, session 2 will cover PB35, which is the second of our 2 catch trade strategies. And PB35s, we're going to give you the definition, we're going to give you the entry rules, all the parameters. It's just like we did in session 1 here for PB3, give you some management strategies and tips, and we're going to give you some examples. So I'm happy to take any questions you might have, and I'm going to leave that link up here. There's a lot of information at that link, newcycletrading.com/Aurora. Dorothy and Aaron worked together to put that list of items together for you. If you don't know anything about trading futures and you want to learn about trading futures, there's a free futures trading course under that link. Also, remember, once you get to this tab, once you get to this link, click education, and everything else that we've provided to support your learning, to support your understanding, to support your success are listed here and available for you. Okay, let me grab some questions here. We'll try to take as many questions as we can. Vic is asking, what's the color for neutral? Neutral is just a blank bar or a white bar. Rod's asking, how do I know if the fractal is pending or it is valid? So Rod, a fractal is defined by one primary thing. You have to have 2 bars before it, and you have to have 2 bars after it. If it is a lower fractal, which is going to be displayed by a V, the 2 bars before it have to have higher lows, and the 2 bars after it have to have higher lows. So a fractal is not valid until 2 bars to the right have completed printing. But the system will display a pending fractal when the second bar is printing, but it's not valid until that bar has completely printed. Vic's asking what is included in the personal trading plan. It is the tool that I showed you. Personal trading plan is this worksheet tool. Lots of automation in this worksheet tool. You get instructions with it on how to use it, and certainly we're happy to answer questions about it in the live trading room. What you do at the end of every day is you record your profit in dollars for the day, trading NQ. You record the number of contracts that you traded in total for that day. And by recording the number of contracts, it's going to then account for fees and commissions and present to you what your net profit or loss was for the day, including fees and commissions. There's another field in here, which I'm starting to use now, which is displaying what time we were done trading. So you can see here that we don't trade past 2 o'clock, but you can see there's some days here where we were done at 10:48 in the morning. That day we were actually done at 8 o'clock, and you can keep track of those types of things. You can use this as a financial planner also in terms of your cash flow. You may decide that you want to build your account up to a certain level, and then you want to remove some funds. There's a field over here where you can input addition or subtraction of funds, and it's a very simple to use but very robust tool. Artem is asking, how many monitors do I need to trade the Aurora system? So you can trade on one. You can trade on one. I prefer 2. I have my charts set up on one monitor, and then just off to the right over here, I have my trading dome. So I have a second monitor that is sitting immediately to the right of my chart, and that's where I have my trading dome. But I've traveled extensively, and I've scrunched my charts together so that my trading dome sits right here on the right side of my screen. Some of it depends on how big your monitor is. I was doing that on a laptop. It wasn't, the best configuration, but it would work. But 2 would be the most that you would need. You can do it with 1, but 2 would be the most you would need. Verma is asking what PBA and CXA stand for. They are just codes that we use to denote the trade strategies. They're not acronyms for anything, so it's just PBA and CXA. But Kevin's asking about the PTP and says that our PTP is set up for a max loss of 30.25. That's not max loss, Kevin. That is planned average, and it's based on what the system has generated. Our maximum loss plan is 85 points. So you're going to have some days where you might lose, 10 or 15 points. You have other days where you might lose 85 points. I'm inputting an average here based on the frequency of occurrences of loss as well as the average value of the losses. Pamela is saying, could you please explain the white bars again? You can ignore white bars. White bars are the same as no bar at all. It's just another indication. We may even remove the white bars from the system, but you don't have any reason to pay attention to them. It basically means the signal is no longer there. Brent's asking, does Infinity allow you to make your profit and stop based on bar open? No, but you can easily adjust your profit target very, very easily on the dome. There's a great training video on the education site about the Infinity Dome and how to use it effectively. And then we're going to, in one of the future sessions, we're going to talk a little bit more about the dome and how to manage more than one position on the dome. And we're going to give you a little tip that we actually just learned about here today that makes it even easier to make those adjustments on your dome. David's asking, why do you have all the other indicators? Seems like mostly use PBA. We do use PBA and CXA. I enjoy having the other indicators because they give me hints as to what might be coming. Otherwise, I'm just waiting simply for PBA, red or blue to print. With a CXA indicators, with the AO and the profit flow oscillator and the Cycle Finder Plus, they're all just hints. You don't need them. You're not trading them, but I'm experienced with all of these indicators. I've traded all of these indicators in the past, and they just give me a clue as to what direction we might see a trend coming. And they also tell me when the current position or the movement in the current direction might be weakening. So you don't need them. I like having them out there. If you have a PBA on the 3-minute, Jackie, and you have an opposite CXA on the 5-minute, that's a no trade. You're not going to take a trade. You need to have a PBA on the 3-minute, and you have to have no conflict on the 5-minute. You have to have a neutral condition on the 5-minute or aligned. But if it's aligned, we're going to talk about that in session 2. Carol's asking, how long has this been in use? So the Aurora trading system, we started really developing it and refining it in August of 2020. I was personally trading, hundreds of positions and was working on refining the settings, refining the indicators that would be represented by the PBA and the CXA, and refining a set of rules. Kristen joined the project early in 2021, and we went through multiple different iterations of rules and this tracking tool that Aaron created for us that I've showed you. We have different variations of that align to all of the different rule sets that we had defined. And we kept finding ways to refine, we kept finding ways to improve until we got to the final rule set. And we arrived at that conclusion sometime around mid to late September of last year. And so what we did was we drew a line in the sand and said, we're going to start a fresh tracking tool to track all of our trading that corresponds directly to this final set of rules. And so that's what we're presenting to you. This tracking in the final set of rules has been in place for 13 weeks. And we have all the different variations of the tracking tools prior to that. Now, what's interesting is if I look at I'm going to change this back to all so I can look at the entirety of the system. If I look at the entirety of the system, which right now is averaging just over 155 points a day, we had earlier versions of the system with different rule sets and different combinations of indicators that was averaging really strong profit production, but in the 65, 70, 75 point range. But the more we dug into it, the more we were able to refine it. And that's how we arrived here. So I would say that the system has been in existence in some form since late August of 2020, but it wasn't until mid-September of 2021 that we really arrived at the final set of rules that we're presenting to you here. Michael P is asking if we ever open positions on a 5-minute bar. The only use currently for the Aurora system, within the Aurora system for a 5-minute is that 5-minute CXA. which is confirming or telling us not to take a 3-minute PBA. Mario's saying, so if the bar switches from color to blank on the PBA, we hold the trade and do not exit. That's correct. We only exit on a reversal color bar only. Yes. We'd prefer that you exit for 10 points of profit, Mario, but yes, you're either going to exit for 10 points of profit, a fractal loss, or a 20-point loss, or a reversal. Adrian's asking, are the plans to fully automate your system? That's kind of the next phase for us. It's going to require some resource commitment. It's going to require some programming commitment. But yes, that is something that we would like to work for. Fergal's asking, can I show what the open of the bar is? It's just very simply, when you have a new 3-minute bar present itself, this bar, for example, we're in active market session right now. This bar, I'm going to show you on a 5-minute, it's a little easier to see. This 5-minute bar, you can look at the open, high, low, close price here in the upper left-hand corner. That bar opened at 2015, that's 8:15, and it opened at 8:28 1/4. So that's the bar open. And the 3-second rule is you want your trades to come on within 3 seconds. So here's a 5-minute short that came on at 20, that's 8 o'clock and 1 second. If it had come on after 3 seconds, then it would not be considered a valid entry. Here's a PBA long. Now I'm using 5-minute as an example. Don't be confused because I'm using 5-minute as an example, but we are not taking 5-minute trades. But here's an example on the alert log at 1900 and then 37 seconds. That would not be a valid signal for us because it came on after 3 seconds. Well, that's a little bit of a tricky conundrum there, right there, Shastri. Shastri's saying if the 3-minute PBA bar flashes on and then goes away before 3 seconds, do we still take the trade? The answer is yes, but of course, every trader can, use their own discretion. We have trades where we've gotten into the trade because we see the alert log gave us a heads up that was a valid trade. Then the alert goes away. Sometimes it goes away and we end up taking a loss on that trade, but sometimes it represents itself. It was just kind of a momentary flash on and off. Vic on, let's see here. There we go. Want me to go back to example 3? Yes. We had no conflict because the 5-minute CXA was neutral. Conflict would be if there was a short CXA there, but it was not. Generally, if we stop trading early in the day, Samson, it's because we've hit our target for the day. It might have been our loss target for the day or or our profit target. But if we quit trading early in the day, it's a great opportunity to go do something different. Go play in the snow, go play golf, go hang out with your family, love on your grandkids. That's why the personal trading plan, in my opinion, is so important. It gives you an idea of, well, what is enough for me today? I know that any day that I hit 120 points, I'm right on target to hit my $4.2 million goal for the year. I might not hit 4.2 million. I might hit 2 million. I might only hit 1 million. Any way you slice it, the Aurora trading system is giving me an opportunity to have a huge opportunity this year, starting with a $5,000 account. Artem's asking, what do I mean by mid-bar? Mid-bar is when we have a new bar come on, but it doesn't come on at the open of the new 3-minute time period. So if we look at our, here's a good example. PBA short on the 3-minute, 19:51 and 34 seconds. That's what we mean by mid-bar. If this had come on at the open of the bar, it would have been valid short at 19:51 or 19:51 and 1 second or 2 seconds and 3 seconds. But at 19:51 and 34 seconds, that's what we refer to as a mid-bar open. So that's an example for you. Rob's asking, is PBA the stronger of the two catch signals? Well, let's look at that. PB3 in our database is averaging $746 a day. What we're going to be talking about in session 2, which is PB35, is averaging $611 a day. So the PB3 is slightly more favorable than the PB35. Brent's saying, are you not worried about risk to reward being 2 to 1? I'm not sure why I need to pay attention to that, because we've defined the parameters based on all of the trades, thousands of trades that we've taken, and we have our performance metrics. I know that in the combination of wins to losses, overall, we're averaging over 150 points a day positive. So when you say risk to reward, that's usually making an assumption that you have an equal number of wins and an equal number of losses, and that wouldn't work. That would not work. But we've built a system that's going to have a far superior number of winning trades than losing trades, and the overall profitability of those winning trades is going to exceed the loss of the losing trades. We do not currently do that, Sam. Sam's just asking if we provide a trading service on their behalf for a fee. We're not currently offering that. Most people are wanting to take their $3,000 or $5,000 account and have somebody else do that, but that's not something that we are in the business of doing. Samson, I'll just say that TradingView has some pretty outstanding discount deals going on right now. We don't have any particular arrangement with TradingView where our subscribers get preferential pricing, but you can get 30 days free right now. I think I saw yesterday that you can sign up for a year in advance for only $360, which is just a really inexpensive price. When I think about those expenses in getting into business, compared to a traditional business owner or someone who's thinking about starting a business where you might need inventory, you might need a fleet, you got to hire employees, you got to hire marketing people, you got to have sales people, you got to have office space or retail space or warehouse space. This is such an inexpensive business to get into. So I'm going to encourage you. I don't mean to say anything, derogatory to anybody, but I'm going to encourage you to don't think about your expenses as your primary focus. If you really have a desire to trade and you're committing yourself to trade and you acquaint yourself with the system and you believe that you can do this, then think about what your net profit is overall. We just introduced this to our live trading room last week. We had several people at the end of the week that were telling us that they observed and then they decided they were so comfortable with it, they started trading it. And they've already, in a single day of trading, made their monthly subscription fee back. That's a monthly fee, but they made it in a single day. So I think that if you even were successful at achieving half of what the system performance has shown, which would be 75 points, which is $1,500 a day, which is $30,000 a month. And it's going to cost you in the entirety less than $1,000 a month to have an opportunity to make $30,000 a month. It's a no-brainer in my opinion, and you shouldn't be asking questions. This isn't saying, I'm not getting on you about this. I'm just making a very firm point. This is a business, and you shouldn't be asking questions about, well, this expense and that expense, if you really believe you can do it. If you could make $10,000 a month, which is only 30% of half of what the system has produced, and it's going to cost you $1,000 a month, and you got $9,000 a month of net upside. In my opinion, as a business owner, that is a no-brainer. If I walked up to you on the street and said, hey, listen, for $5,000, you can get into this business. It's going to cost you about $1,000 a month, and you can potentially make $10,000 to $60,000 a month, somewhere in there, depending on your effort and your diligence. We don't pay attention, Jackie, to an opposite CXA signal on the 3-minute. CXA on the 3-minute is really just kind of a heads up of what might be coming. Michael's asking, is the tracking tool included with a personal trading plan? Absolutely not. This tracking tool is a very robust, powerful tool that we've created that Erin continues to tweak. She gets full credit for creating this tool. And we have some thoughts and design on creating a version of it that we could make available as a subscription to those of you who would like it. But it is a massive database right now. So we need to work through how we would have, how we'd be able to give access to individual subscribers that would have their own version of it and be able to log their own trades. That's something that's on our wish list to create. Right now, we're fully immersed and focused in completing the rollout of Aurora, get that in front of all of you good people so that you can take advantage of the profits, and then we'll work on some of those other things down the road. Tim's asking, do we get signals in TradingView when to get in and get out, or we have to monitor on your own? With the Aurora system, you really have to monitor on your own. You are going to get alerts. You're going to get these alerts, which you will set up, and they're going to tell you when you have a PBA short, a 3-minute. They're going to tell you when you have a 10-minute PBA short or long, but you really have to dedicate yourself to a certain amount of time to trade, because you are the key in determining whether or not there's alignment between the 3-minute PBA and the 5-minute CXA, making sure there's no conflict. Sad is asking, can you explain the mid-bar signal? I think I already did that. If you need me to explain it again, just let me know. It's basically any signal that comes on after the first 3 seconds of the new bar presenting itself. So in this PBA short, for example, 20, 13, and 53 seconds, that's mid-bar. Here's 20, 15, and 3 seconds. That is within our 3-second time frame, so that is a valid signal. And then can you show statistics of a period of time for the days that losses were 85 points? I can show that to you. So we have our cap locked in here at 85, and there are only 4 days that we've recorded. I'll find them for you here. Right here is one. We lost 1,720, so just over 85 points. The second one, it presents itself right here, but it was actually not a losing day, because before we ever got to that point later in the day, we were up $4,680, and we never would have given that back. We're going to teach that in session 5. So that's not a second max losing day. This is the second max losing day right here. This is the third max losing day right here, and it's a little higher than 85 points because we might have been at 80 points or so, and we might have gotten into another trade, and then, you know, we took a loss on that trade, so it might have ended up being slightly more than 85 points. And then here's the fourth one. The fourth one was last week. So we've had 4 days out of 13 weeks that have hit our max loss. You can ignore the white price bars, Virgilio. White price bars for your trading is the same as a blank. White or black is the same. All you care about is red and blue, red short and blue long. Brent's asking, after a mid bar, the next bar is valid if no conflicts exist. That is a true statement. If you have a mid bar short, for example, I gave an example of this, but if you have a mid bar short and it comes on after the open of the bar, after 3 seconds of the open of the bar, and the next bar is still presenting short, as long as there are no conflicts on the 5-minute CXA, that is a good trade to take. Samson's asking, is the premium level of TradingView worth the extra payment? Well, it's not a lot of money, first of all. I think it is, but you definitely need Pro Plus to trade the system. Premium, there's a couple of advantages to that, but you definitely need Pro Plus, and you can get by with that. Havan's asking, would you consider having a live evening trading session for those of us learning the system, maybe for an hour or so, those of us who work full-time but want to trade after hours? Thank you for your consideration. I will take that under consideration, Van. It's actually something that I had been considering because I know that several of you are occupied during the day and are looking for a little reinforcement and support. So we will consider that and let everybody know if we decide to do that. Carol is saying this seems to also work for a choppy market as well as a trending market. Well, that right there, I'm glad you observed that, Carol. That is one of the most basic design objectives that we had. We wanted to weed out some of the choppiness. Now, we can't weed out 100% of it, and you saw that we have 4 days out of 13 weeks where we had maximum loss. Those are days that just didn't cooperate with us. By the way, the last one was a Fed day. So there's kind of an interesting correlation there. But yes, one of the designs of the system was to address both choppy conditions as well as trending conditions. And I feel like it's done a successful job at doing just that. Pamela's saying, so the break in the PBA signal only needs to be on the 3-minute chart to re-enter the trade should you get another PB3. That's absolutely true. You don't need a break in the 5-minute if you're looking for that 5-minute alignment or a lack of conflict. And of course, we're going to be talking about the 10-minute here a couple sessions from now. You don't need a break in the 10-minute. The 3-minute is pretty much your trigger. So here was a trigger to get into a trade, and then you wouldn't get in another bar, you wouldn't get in another bar. Once you have a break, now you're qualified to possibly re-enter a trade. Christy, right now what we do is we post on the New Cycle Trading website the performance by day. We're not posting the detail right now. Carol's asking, how does one also place a trade within a 3-second window? Well, Carol, you're just simply watching the chart. You're looking for the signal to come on. If the signal presents itself and it's right at the open of the bar, you're going to take the trade. If you are in doubt, maybe you thought you saw a hesitation or a pause on that signal coming on, you just simply look over at the alerts log. In this case, you can see that there's a PBA short that's flashing on and off at 2036. I can confirm that that actually came on at 2036 and 1 second. So that would be a valid trade. And some of that's just going to come with experience. You'll get used to recognizing the signals. Michael P is saying, as far as alerts, you really don't need many set up. That is absolutely true. You need a limited number of alerts set up. I have more set up than I need, but I use them all for different reasons, not necessarily for the core of Aurora system trading. Ron's just kind of passing along a thought. Might want to mention, if someone only has 2,000 to start, they can start by trading the E-minis, the micros. Start trading the micros instead of the E-minis. We're trading NASDAQ 100 futures, we're trading the E-minis, but the micros are a value of 10% of the minis, and it's a great place to start your live trading after you've sim traded for a period of time and really understand what you're doing. Mario, I see you're asking about the lag in TradingView. Sometimes there's a lag in TradingView. Sometimes it's indicative of perhaps a blip in your internet connection, your processor speed, whatever it might be. It's just an inherent part of the type of business that we're in. We're relying on a massive amount of data being pushed into the Aurora system from TradingView, and every once in a while there's a little bit of a blip. I would say that before a regular market session, I will sometimes see that we roll over to the next 3-minute bar and there's this delay, this lag in printing. I'll just refresh my chart or even log off and log back on. That usually clears up that issue. Okay, David M is saying, do you have to have a red price bar and red PBA and no conflict on the 5-minute? You have to have a red PBA and no conflict on the 5-minute. You have to have a red PBA and no conflict on the 5-minute. I don't care if the price bar is red or neutral. Rex is saying, I can only trade about 3 hours per day. Which 3-hour period do you think is most consistent with the indicators performing best? I can't nail that down for you quickly here, but I'm going to give you, 3 hours a day. If you traded, say, from 7 to 10, these are Eastern times, 7 to 10 is averaging 82 points a day. Well, if you've got 3 hours to devote to making $1,600 on average day, that seems pretty reasonable to me. 8 to 11, I'll just give you one other. 8 to 11 is about 100 points a day. So if I was you and I only had 3 hours a day to trade, I might look at trading from 8 to 11. Let me just try one last one here. We were looking at some of these earlier today. 9 to noon. 9 to noon is 99 points. So 8 to 11 and 9 to noon are both right around 100 points. I was asking, when you go through scenarios of doubles with PB3, we're going to cover that when we get to the PB13. Because the only time you will have a double is when you have a PB13 combined with, which is a trend trade combined with a catch trade. Pamela's saying on this bar that was flashing, which I think was the 2036 short, there was no conflict. The that was a valid trade, and you would have set your stop. See, the upper fractal is too far away. When that bar rolled over to the 2039, let me just see, that long signal came on at 2039 and 31 seconds. So you would not have exited out of that because it was a mid-bar long. But at the 2039 mark, I might have used the 3-minute fractal because now that's a valid fractal. So I would have been in the trade at short at 8:20.5, and I would be out of the trade at 8:25 3/4 if I use the 3-minute fractal. We tend to prefer to use 5-minute fractals, but I will look at 3-minute fractals, especially if I start to see a weakening signal. All right, Seth, so I'm going to go back to this morning. I'm going to go back to regular market session open this morning, okay? It was intense this morning. So here we go. At 9:30, we had a bar that from the low to the high was 72 points. If the next bar had presented a valid signal, we would not have taken it because the prior 3-minute bar was over 50 points. The next bar, which was the 9:33 bar, was a 45-point bar. So if the next bar had presented a signal, we would have taken that. It would have been valid for us. The next bar was almost 50 points. And so we would have taken the next signal. It wasn't quite 50 points, so we would have taken the next signal. And so then we have a bar that was more than 50 points, and the next bar was a valid signal. We wouldn't take that. So we're in the first half hour or so generally, with some discretion, we are filtering out trade signals that present themselves after a 3-minute 50-point bar. Hope that helps answer your question. Okay, folks, I don't see any other thoughts or questions out here. I'm going to go ahead and close out. That concludes session 1. Just as a reminder, in the next session, we are going to be talking about PB35s, which is the next catch trade. And we'll define that for you, tell you how to recognize an entry, what the profit and loss parameters are, and the management strategy and tips around that. So we look forward to having you in session 2. Thank you for being here, and thank you for your interest in the Aurora trading system. I'll just tell you one last time, I think that it is one of the most powerful profit-generating systems I've ever encountered. Now, I'm privileged to have been one of the creators of this, along with the entire team here, Craig, Kristen, and Aaron. And I'm proud to have put this out in front of so many traders who early on are adapting it to their own trading and finding some really phenomenal performance. Today, I had traders telling me they were done for the day. They were up 200 points. They were up 110 points. They had just, in 3 hours, made their full monthly subscription to the system. So it's a life changer, in my opinion. If you truly have ever had a desire, if you don't already, of making a 6 to 7 figure income, and you want to do it with a fairly simple commitment of your time and a little dedication to learning, we're here to support you. We would love to support you in the live trading room, be available to guide you through the signals, as well as help answer any questions that you might have. So you can go to newcycletrading.com/Aurora, and that will lead you to this page. and you can get more information on there. But then if you go to the education tab, sorry, right at the top, if you go to the education tab, there's a whole list of items. The first two items are where you can subscribe to Aurora. We've offered a big discount. The list price of the system is $997 a month, but we're offering it for the first 2 months at only $397 a month, and then starting in month 3, $797, and you get that $200 discount for as long as you have an ongoing subscription. And then the personal trading plan is just a one-time payment of $197. So you can look at that, and then all these other features are to help supplement your education. If you're not comfortable trading futures, just download the Futures Education. It's free. The fractal instructional video using the Infinity Dome. You can take a look at our indicators on TradingView, etc. So we're putting as much information out there as we can to help you be successful in your personal goals. All right, thank you so much for being here, and I will go ahead and close out now, and we'll see everybody again for session 2.